Traders, welcome for this new video on successful trading. In today's video, I'm going to show you how to use the Webull Option Calculator. I'm so excited about this new feature here on Webull on how to calculate or simulate option pricing. And if you stay till the end, I'm going to reveal an option trading strategy that you will be able to start using today actually on this very stock that we will be illustrating on here for this option calculator on Webull. Without any further ado, let us go ahead and dive in. Okay, so let's see on here. So as of now, in order for me to access this, I need to go to the option part of Webull. So let's actually go out completely and start from scratch as you were just going to look at a stock. And then, so for me, I'm using AMD. You will find out, stick to the end of the video, you will find out why I'm using AMD to illustrate this. So here is the AMD chart. This is the regular chart of the stock. So for us, then you click on option on here, then you go select your option. Now don't ask me why I'm interested into this specific contract. So I'm going to go here to the 75, and in here I want to be able, not as if I want to see the chart of this option. That's really what's in here, right? So I can click on here and then here to get this. We have shown you a video on how to do this before, so I'm going to put that video on here on how to read Webull option chart. But the part that's when you get on here, other than the chart, this is the new feature that Webull added here, is the calculator. So you see the chart is here on the left hand side by clicking on there. And I had this question several times on my YouTube channel, so let me bring just say 2 seconds on here in case those traders are using that. You see how I can change the time frame of my option chart on here very easily, right? So the other day there were several traders who told me that they didn't know how to use that. So this is how you go about doing that. So typically for me, I use the 15-minute, but sometimes I can use 1 hour. That's where I have multiple days. Like here, I'm looking at the option price of AMD expiring on May the 6th, the 75 puts, and I'm able to see it from April the 20th all the way to today. We are May the 3rd. The markets will be opening in about an hour and 15 minutes when I'm making this video. So this part on here is something that you know already, but let's go very quickly here to the part that we want to focus on today, which is Webull option price calculator. So this is the calculator on here. Yes, I know I do not typically talk about the Greeks and everything, but trust me, this part is fun. We want to make the Greek fun, and I'm going to not to bore you on that. So there are 2 lines on here on this option calculator, right? So the first line in blue is the theoretical price. Yes, so if we click on here, you can read the detail on here by clicking what is the option price calculator. You can get all of this thing on here. I will not bore you with that. So just the theoretical price here in blue will be changing with the parameters that affect the option price. The Greeks are part of it. So for me on the Greeks part, I'm going to simulate 2 of them for you really, the theta and the delta. So theta is here. So when you select one of them, that's going to be on the orange line, right? The delta, basically, in case you do not know, the delta gave us the probability of being in the money. But the other way that delta is actually used in option trading, in case you do not know, is this is the amount by which the price of the option increase every single time that the stock gain $1. So let me repeat that. So this means, for instance here, so meaning right now, I think in pre-market, the actual price for AMD is $90. Let's say if it's $90 yesterday, whatever it was yesterday, right? So notice how as the price, I change the price of the underlying stock AMD, the price of the option obviously changed, but the price of the delta changed as well, right? Because in this case for the put, if the stock start going up, look what happened to my delta, meaning the position is going against me, so I'm losing money on if I have that contract. Now it's worth 50 cents. My delta is 8.16%. So as I continue to increase the price, my delta, which is negative here, that's the difference how to recognize put and call. In the put scenario, the delta is always negative. The delta is positive on there, but it still reflects the probability of being in the money and how much money you will be making when the stock moves by $1 by $1. So in this case here, for me, if the stock is going up, I'm losing money, and look at my delta is coming down. Now, if we go the other way, all of a sudden, let's say AMD stock on here, let's try to go fast on here, just trying to see, you see how delta is going up as the price is coming down. So this is one way that you use the option calculator, by simply varying the price of the stock, and then your theoretical price for the stock will be changing, as well as the delta and the theta. There is an article on that we have on the blog where I actually showcase how to pick strike price, because on one of the things on strike price that you want to do, you can either use the ATR technique, which we have a video for on here on this channel, or for the recent thing that I've suggested is the ratio between the delta and the theta. You want, this is not a good ratio of delta to theta, meaning that, and you can see that the probability just being 8%. So typically you will want a strike price where, if you can, because it's going to cost you more money sometimes, where the ratio of delta to theta is 5, 7, and sometimes 10. Okay, I can show you such example in subsequent video later on if you saw. So from me on here, let's focus on to the option price calculator for Webull. So the part that I want on here, so you get the idea between the theta and the quick, right? As a reminder, theta again is going to be the orange line on here. So you select either the delta or the theta. That's what's represented on the orange line. Theta is the decay, the time decay. So meaning this is how much money we are losing each day, no matter if the stock is moving or not. So yeah, so meaning that whatever. So what's really for those beginners in option trading, what needs to happen is that the delta times the variation, the amount of dollars that the stock will buy, needs to go greater than theta in order for us not to lose money on that day. But that's another story. The parameter that I want us to keep an eye on for this strategy, I told you toward the end of this video, I'm going to give you a strategy, is the implied volatility. It's not really a Greek, but let me show you very easily here. We're going to fix the price of the stock at $90 and not move it at all. So just $90. Here's the current cost of the contract, right? So now what happened on here when we start increasing the implied volatility? Why increasing the implied volatility? I'm going to come to it in a minute or so. So here, let's increase this implied volatility. The implied volatility was, let's go back here, and I'm using exact values here as folks, because the implied volatility on this stock is something that we have been tracking since yesterday. So this contract is actually something that I'm trading right now. So at 130%, the price staying constant, yeah, the stock doesn't move at all. But if the implied volatility goes to 150%, my friend, look what happened. We make 57%. Well. Could you know of a scenario where implied volatility is always going up? Yes, I can reveal one to you. The implied volatility goes up the day before the earning for most stock. AMD is a proverbial stock for which this happened. Meaning, my friend, you and I, we can be making free money trading option just before the earnings by exploiting the fact that market makers increase implied volatility. Why did they increase implied volatility, you are asking? Well, because they want to make this, they want to sell much expensive option to people. People buy options, traders buy options before earnings in hope of a jump in either direction. So that's what happened. That's how market makers, they make money. And then the next day, they bring down the price of those implied volatility. Let me show you. So today, here's where you're trading on here. You can just trade the direction of the stock, right? In this case, if the AMD is bearish, you buy a decent contract, let's say even a delta of 0.2 or whatever that you can afford. For me, most likely I'm going to be using this 75 put expiring on May the 6th. And what I will be looking for is for this implied volatility to move just as we saw it, right? So let's say right now, we know right now it's going to start the day. The market will be opening in exactly 1 hour. It's starting the day at 131%. Yes, it was even lower yesterday. So meaning you could even start this strategy one day ahead, and then throughout the day, we want it to go up and make money. How brilliant is this? Let me show this example for you on here. I apologize for that. I have to go pick up a chart that I saved earlier. So I want to show you this trade that can we get this? Can we get this? Yes, this is a trade here. This was October the 26th. You can go and check this, folks. AMD had earnings, and a trader here, Mr. Sack, this is my exchange with him. He said that, hey, I predicted that the implied volatility will increase. He was able simultaneously on the same day, folks. Look at the time here. This is 12:48 Pacific, 12 minutes before the closing. On that, I believe it was a Tuesday as well, October 26th. This trader was able to apply this strategy of implied volatility increase and make 100% on the 99 puts and 42% on the 160 call simultaneously, meaning this is not two separate parts of the chart. This is a trade, a strangle that he was holding throughout. This is the best that I've seen this technique go on here. So when we come back on here, folks, this is what we will be looking on today: an increase of implied volatility, and you can use this calculator, right, when you are tracking implied volatility. That even chart, historical chart of implied volatility. If you want me to make a video on that, leave that in the comments of this video. So we are giving you a strategy on here on AMD today, but then you could be asking me, hey Telex, what other stock can I use this strategy of implied volatility on, and by using the feature of option calculator for Webull? Well, my friend, you're in luck. Very good. So let me give you the other opportunity tomorrow. Here's the calendar, right? So AMD had earnings today, so we will be able to apply that tomorrow. You have the choice between Etsy, Twilio, Mara, and you can use any other calendar, earning calendars to find other options that you can apply this on. I mean, leave me a comment on here and also subscribe to our YouTube Elite, and we will be able to give you our list of options that where we use this implied volatility technique. We use it last week and the week before on Netflix, Tesla, and even Snap to make decent return like this by simply using the implied volatility technique, strategy, if you will. So this is a summary of the Webull option calculator, where for us we can apply our implied volatility option trading strategy before earnings. Thank you, everybody. Leave us a comment, like and subscribe, and share with your friends in social media. Until then, have a great trading session. Bye-bye.